If you own silver right now, there's a very good chance you've seen a video or a post in the last few days telling you that something terrible is about to happen on February 15th, some kind of IRS crackdown, some kind of new reporting requirement, some kind of government action that's going to target silver owners and force you to register your holdings or face penalties. And I need you to hear me clearly right now. Almost everything you've been told about February 15th is wrong. It's not a new crackdown. It's not a silver-specific rule. It's not evidence of a sudden shift in ownership laws. And if you sell your silver because of this manufactured panic, you're going to be the one who loses. I'm recording this for Financial Crux because someone needs to cut through the noise and give you the actual facts. Not fear, not clickbait. Facts. Because in a market this volatile, where emotions are running this high, the difference between acting on truth and acting on panic could be the difference between building wealth and destroying it. Before we go any further, if you're watching this and you haven't subscribed yet, hit that button right now. This kind of content doesn't get promoted by the algorithms. The sensational panic videos get promoted. The fear-mongering gets clicks. But the calm, factual breakdowns like this one need your help to reach people who need to see them. Also, I've left a link in the description to our WhatsApp community where I share real-time updates. And if you're on X, formerly Twitter, follow us there because when news breaks, that's where we post first. Now let me explain what's actually happening and why you're being misled. Every so often, a familiar wave of fear moves through the precious metals community. A date starts circulating online. A headline gets repeated without context. And suddenly, silver holders are warned that the government is about to crack down. This time, the date-fueling concern is February 15th. Posts and videos are claiming it marks a new IRS rule targeting silver owners. Some are urging immediate selling. Others are suggesting that waiting could lead to forced reporting or penalties. The fear is palpable, and I understand why. Nobody wants to get caught off guard by a sudden change in the rules. But when you slow down and actually look at the facts, a completely different picture emerges. February 15th is not a new IRS crackdown. Let me say that again so it really sinks in. February 15th is not a new IRS crackdown. It's not a silver-specific rule, and it's not evidence of any sudden shift in ownership laws. What February 15th actually represents is a long-standing paperwork deadline, one that's been on the books for years, one that applies to businesses, not individual silver owners, and one that's being misunderstood and amplified into fear by people who either don't understand what they're reading or who benefit from scaring you. Let me walk you through exactly what's happening so you can see the truth for yourself. The February 15th date has appeared in IRS schedules for years. It's tied to information return deadlines, particularly forms like Form 1099-B, which certain businesses use to report qualifying transactions. These are forms that dealers and brokers file, not forms that you file because you own silver. And here's a key detail that almost always gets left out of the panic posts. IRS deadlines frequently shift due to weekends and holidays. For the current cycle, IRS instructions actually list February 17th, 2026, not February 15th. The difference is purely calendar-based, not regulatory. Someone looked at an old schedule, saw February 15th, and started screaming without bothering to check whether that date even applies this year. So, when headlines warn that something changes before February 15th, they're usually reacting to a reporting window, not a new rule. They're taking an administrative deadline that's existed for decades and presenting it as if it's breaking news about a silver crackdown. This is not journalism. This is fear-mongering, and it's designed to get clicks, views, and engagement at your expense. Now let me explain where this panic really comes from, because understanding the source helps you recognize it in the future. Most of the fear surrounding silver comes from mixing three completely separate systems into one story. Each system has different triggers and different purposes, yet they're often discussed as if they were the same thing. This creates confusion that makes the threat seem much bigger than it actually is. Let me break down each system so you understand what you're actually dealing with. System number one is taxes you report yourself. If you sell silver at a profit, capital gains taxes may apply. That responsibility falls on you, not the dealer. You report it on your tax return just like you would report gains from selling stocks, real estate, or any other asset. Here's the crucial point. This hasn't changed. This has been the law for decades. It applies to many assets, not just precious metals. There's nothing new about it. There's nothing specific to February 15th about it, and there's certainly nothing that requires you to panic sell right now. When you sell an asset for more than you paid for it, you may owe capital gains tax. When you sell for less than you paid, you may have a capital loss that can offset other gains. This is basic tax law that applies to everyone who sells appreciated assets. It's not a silver crackdown, it's just how taxes work. System number 2 is dealer or broker information reporting. In certain situations, a dealer may be required to file an information return such as Form 1099-B. This is where February 15th comes into the picture, but not in the way the fearmonger suggests. Here's the key thing to understand. This reporting is not automatic. It depends on the type of product being sold, specific quantity thresholds, and defined reportable conditions that are outlined in IRS guidance. Most silver transactions do not trigger this reporting. Let me repeat that because it's critical. Most silver transactions do not trigger 1099-B reporting. The form applies to specific categories of transactions involving specific products in specific quantities. If you're selling a few silver eagles or some junk silver coins, you're almost certainly not triggering any reporting requirement. And even when reporting does apply, it's the dealer who files the form, not you. Your obligation is the same as it's always been. Report your gains accurately on your tax return. The 1099-B, when it applies, is just a mechanism for the IRS to verify that reported sales match actual transactions. It's not a new surveillance program, it's a paperwork reconciliation process that's existed for years. System number 3 is cash transaction reporting through Form 8300. This is the form that gets brought up constantly in these panic discussions, and it's the one that's most consistently misunderstood. Form 8300 applies when a business receives cash payments of $10,000 or more. It exists to support anti-money laundering rules. Its purpose is to track large cash transactions across all industries, not just precious metals. It applies to car dealerships, jewelry stores, real estate transactions, and countless other businesses. Here's the critical point that the fearmongers always leave out. Form 8300 is about the payment method, not about silver ownership. If you buy silver with a wire transfer, a check, or a credit card, Form 8300 doesn't apply regardless of the amount. It only applies to cash payments over $10,000. And Form 8300 has nothing to do with selling silver. It's a form for receiving cash payments. If you sell silver to a dealer, the dealer is paying you, not receiving cash from you. Different form, different trigger, different system entirely. So when someone lumps together capital gains taxes, 1099-B reporting, and Form 8300 into one scary story about a February 15th crackdown, they're either confused or they're trying to confuse you. These are 3 separate systems with 3 separate purposes, and conflating them creates artificial fear that benefits no one except the people generating clicks. Now, let me address the difference between buying and selling silver, because this is another area where confusion runs rampant. One reason fear spreads so quickly is that buying and selling are treated as if they're identical. They are not. When you buy silver, in most cases, there is no automatic reporting. The transaction is between you and the dealer. Money changes hands. Silver changes hands. Unless you're paying more than $10,000 in cash, triggering Form 8300 on the dealer's end, there's typically no federal reporting requirement at all. You don't need to register your silver. You don't need to notify the government that you own silver. You don't need to file any form because you made a purchase. Silver ownership is legal. It's private, and in most cases it's unreported. When you sell silver, reporting considerations can come into play, but only in specific cases. A common signal to watch for is if a dealer requests a W-9 form from you. That request often means the transaction may fall into a reportable category where the dealer needs to file a 1099-B. But here's what's important to understand. That request doesn't imply wrongdoing. It doesn't mean you're in trouble. It simply reflects paperwork requirements for certain categories of transactions. And even when a 1099 is filed, your obligation remains the same. Accurately report your gains on your tax return. If you've been doing that all along, nothing changes. If you haven't been doing that, well, that's a separate issue that has nothing to do with February 15th. Now, let me address the distinction between paper and physical silver because this is where emotions tend to spike the most. Paper silver, like ETFs or brokerage-held products, exists entirely inside the financial system. When you buy shares of a silver ETF, that transaction is recorded. Your brokerage reports it. Documentation is built into the structure from day one. There's no privacy to lose because it was never private in the first place. Physical silver is different. When you hold physical silver, you hold it privately. Your ownership exists outside the brokerage system. There's no automatic reporting simply because you possess metal. But here's the nuance. When physical silver enters a reportable transaction, paperwork can follow. Not because silver became illegal, not because ownership is now tracked, but because certain transactions create reporting obligations for the parties involved. The silver itself didn't change. The transaction created the paperwork requirement and understanding that distinction is crucial for maintaining perspective. If you hold physical silver in your safe, the government doesn't know about it and doesn't need to know about it. There's no registration requirement. There's no reporting requirement for ownership. February 15th doesn't change that. Nothing has changed that. Now let me cut to the most important question. What actually changed for silver holders? For most people, the answer is simple. Nothing. Silver ownership rules didn't change. There was no sudden registration requirement. No new silver-specific enforcement began. No February 15th crackdown was announced or implemented. What did change was the volume of noise. And noise drives emotional decisions. Someone saw a date on an IRS schedule. They didn't understand what it meant. They made a video about it. Other people shared the video without fact-checking. The algorithm promoted the content because fear generates engagement. And suddenly millions of silver owners are worried about something that doesn't actually exist. This is how manufactured panic works. It starts with a kernel of truth. In this case, an actual date on an actual IRS form. It gets stripped of context. It gets amplified through social media. And by the time it reaches you, it's transformed into something completely different from reality. The real risk isn't the IRS. The real risk is acting on bad information and making decisions you'll regret. Now, let me give you a practical framework for evaluating these kinds of claims in the future, because this won't be the last time someone tries to scare you. Before reacting to fear-driven content, slow down and ask yourself a few simple questions. Question 1, are you buying or selling? The rules are different for each. Most of the fear is about selling, but much of the content conflates the two. Question 2, what payment method is being used? Cash over $10,000 triggers Form 8300. Wire transfers, checks, and credit cards do not. If you're not using large amounts of cash, Form 8300 is irrelevant to your situation. Question 3, is a W-9 being requested? If a dealer asks for a W-9, it likely means they anticipate filing a 1099-B. That's not a threat. It's a paperwork signal. If no W-9 is requested, the transaction is probably not reportable from the dealer's side. Question 4, what product type and quantity are involved? Not all silver is treated equally for reporting purposes. Certain bullion products in certain quantities may trigger reporting, others don't. The specifics matter. Now let me shift gears and talk about what's actually happening in the silver market. Because while the fearmongers are focused on fake crackdowns, real developments are unfolding that deserve your attention. High-Raftoft mining just surged 19.5% in a single trading session. The stock closed at 42.7 after investors poured in on renewed strength in gold and silver prices. This move came after 4 straight days of decline for the stock. Bargain hunters stepped in, and the rebound in precious metals prices provided the catalyst for a significant rally. As of the latest data, spot silver was up over 2% and gold was up nearly 2% as investors returned to precious metals following last week's dramatic sell-off. Now, for those who don't know, High-Raftoft Mining is a US-based mining firm focused on developing one of the world's largest gold and silver deposits in Nevada. This is a domestic producer with significant resources in a politically stable jurisdiction. And here's the news that I think is most significant. Hifra recently announced that they have found the highest grades of silver ever recorded in the Vortex Silver System at their Nevada site. Drilling results in all depths and directions show continuity of resources. Let me translate what that means. They're finding higher quality silver in a deposit that continues to extend in every direction they drill. That's exactly what you want to see from a development stage mining company. It suggests the resource could be even larger and higher grade than previously estimated. For context, when a mining company reports that grades are increasing and that resources show continuity, it typically means the project economics are improving. Higher grades mean more silver per ton of ore processed. Continuity means the deposit is cohesive rather than scattered, which makes mining more efficient. This is the kind of news that moves mining stocks, and the 19.5% surge reflects investors recognizing the significance of these drilling results in the context of a recovering precious metals market. Now, I want to be clear about something. Hifra Mining is a development stage company, not a producer. They're working on bringing their deposit into production, but they're not generating revenue from silver sales yet. That means the stock carries development risk that more established producers don't have. And that's why understanding the difference between real risks and fake risks matters so much. If you sell your silver because of manufactured panic about a paperwork deadline, you might be selling at exactly the wrong time. The fundamental case for silver hasn't changed. The structural deficit persists. Industrial demand continues to grow. Central banks are still accumulating gold. The only thing that changed was sentiment temporarily, and sentiment can reverse in a heartbeat. Now let me address the psychological aspect of this because I think it's important to understand why these fear campaigns work so well. Precious metals investors are by nature skeptical of institutions. That's often why they hold gold and silver in the first place. They don't fully trust the government. They don't fully trust the banking system. They want assets outside the paper money system. That skepticism is healthy in many ways, but it also creates vulnerability to a specific type of manipulation. When someone tells you the government is coming for your silver, it confirms your existing fears. It feels true even when it isn't, and you're more likely to act on it without verification. The fearmongers know this. They know exactly which buttons to push to generate engagement and panic, and they exploit that vulnerability for clicks, views, and in some cases to benefit their own positions in the market. So here's my advice. Be skeptical of institutions, yes, but be equally skeptical of the people telling you to panic. Apply the same critical thinking to fear-based content that you apply to government announcements. Ask for sources, demand context, verify claims before acting, because the people trying to scare you rarely have your best interests at heart. They have their own interests, which might include generating ad revenue, selling you something, or manipulating your behavior for their benefit. Now, let me talk about what you should actually be focused on instead of fake crackdowns. The real developments in the silver market are far more interesting than paperwork deadlines. We've seen one of the most volatile periods in silver history over the past few weeks. Prices surged to all-time highs. They crashed nearly 30% in a single session. They bounced back sharply. The structural case for silver remains intact. The 5-year supply deficit continues. Industrial demand from solar, electronics, and EVs keeps growing. Central bank accumulation of gold provides a supportive backdrop for the entire precious metals complex. Fiscal concerns around government debt and currency debasement aren't going away. These fundamentals haven't changed because of February 15th. They haven't changed because of the volatility. They're structural forces that will play out over years and decades, not days and weeks. So, while the fearmongers want you to panic about a paperwork deadline, the sophisticated investors are focusing on the fundamentals. They're positioning for the long term. They're using volatility as an opportunity rather than a threat. Which camp do you want to be in? Now, here's my question for you, and I want you to answer in the comments because I'm genuinely curious. Did you see the February 15th panic content before watching this video? And if so, did you consider selling your silver because of it? I'm asking because I want to understand how widespread this fear campaign has become and how many people it's affecting. Your answers help me know what topics to address and how urgently to address them. Let me give you some final thoughts on this situation because I want to leave you with a clear framework for navigating future scares. The February 15th IRS silver crackdown narrative is largely recycled fear built on misunderstanding. The date reflects an administrative reporting window that's existed for years. Form 1099-B applies only to specific reportable sales that meet certain thresholds. Form 8300 applies only to large cash payments over $10,000. Silver ownership itself hasn't changed and isn't being tracked or registered. The real risk isn't the metal. The real risk isn't the IRS. The real risk is acting emotionally instead of deliberately. It's making decisions based on fear rather than facts. It's selling at the bottom because someone convinced you the sky was falling. Staying informed, calm, and intentional isn't just good advice. It's how long-term investors avoid expensive mistakes. It's how they build wealth while others destroy theirs through panic. The precious metals market is volatile right now. That volatility will continue. There will be more scares, more fear campaigns, more attempts to manipulate your behavior. Each time you have a choice. You can react emotionally, or you can verify the claims, understand the context, and act deliberately. I know which choice leads to better outcomes, and I hope after watching this video you do too. If this video helped you see through the fear-mongering, hit the like button. Share it with someone who needs to see it. There are people right now about to sell their silver because of a fake crackdown, and maybe you can save them from that mistake. Subscribe if you haven't already. The next fear campaign is always around the corner, and I'll be here to break it down when it comes. I'll see you in the next one. Stay sharp out there, stay calm, and don't let manufactured panic drive your financial decisions. One more thing before I sign off. I want you to understand something fundamental about how information moves in the precious metals community. This space is filled with people who have strong opinions and strong incentives. Some are dealers who benefit when you buy. Some are content creators who benefit when you engage. Some are market participants who benefit from moving prices in one direction or another. None of that makes them bad people, but it does mean you need to filter everything through a lens of skepticism. Ask who benefits from you believing this. Ask what they're selling, whether it's a product, a subscription, or just clicks. The February 15th panic is a perfect example. Someone created content that scared millions of people. That content generated massive engagement, and the people who created it benefited from your fear, whether or not the fear was justified. Meanwhile, the people who panicked and sold their silver at low prices transferred wealth to the people who stayed calm and bought. This is how the game works. The calm inherit the wealth of the panicked, and understanding that dynamic is essential for navigating markets successfully. So the next time you see scary content about silver, gold, or any other asset, pause, breathe, ask the hard questions, and only then decide how to respond. Because the people who win in these markets are rarely the ones who react fastest. They're the ones who react most accurately. And accuracy requires cutting through the noise to find the signal. Not hype, not fear, just the clearest picture of what's actually happening that we can provide. All right, now I'm really going.